about, let's go to our checklist, okay? All right, so this is step 2 in how to day trade, okay? Okay, so next we're gonna learn how to add your armor. By this, what do I mean? I mean, do not trade blindly. So think about it like this when you go into the stock market. Like you're a Viking and you're going to go to war, right? You're not going to go to war with like, you know, something covering your eyes, right? Because more than likely you're going to get slaughtered, okay? And that's what I do believe is going to happen to you if you don't use some type of indicator. By this I mean like some kind of like technical indicator to help with your day trading, okay? Because you're going to blow up your account even quicker without using any indicator from my experience, okay? So I would add some armor into your day trading, okay? Use some technical indicators. Okay, so let's get right into it. So on our last video, I did a video over just support and resistance, okay? So do not move on with this video until you watch that video and until you actually understand support and resistance, okay? So like YouTube it, I don't care, but understand support and resistance. And a viewer asked me, they sent me an email asking what time frames I use yearly and intraday, okay? And the levels have to match, okay? So, but my last video explains all that, so I'm not going to spend time anymore. It's support resistance really, so understand that to move on, okay? So today we're going to add a second indicator, and it's going to be RSI. We're going to talk about RSI today, and that's what we're going to focus on, okay? So we're like just adding indicators during each video, so by the end of it all, maybe you'll understand how to use it all together, okay? So today, RSI stands for the Relative Strength Index. It's one of the more established indicators. I think it's been around since like the 70s or something like that. So, but it's not perfect, okay? There's nothing in day trading that's going to align like and be perfect, not all the time, okay? So RSI, what do I use RSI for? Entries, exits, and then you get to see where it's oversold or overbought, okay? So anything above the 70 is overbought, right? Expensive. So what do you want to do? You probably want to sell it, okay? Anything low at the 30 mark, it's oversold, it's cheap, you probably want to buy it, okay? So like I said, it's not a perfect indicator, but it's a good one to use. I use it. So like I said, overbought is 70, looking to sell. Oversold, 30 mark, looking to buy. Okay, and I'll show that in a minute on an actual graph, and we'll draw one out because I can explain things better that way so I don't forget something, okay? So another thing you need to understand before getting into a trade is purely not just day trading off technicals, okay? Because that's not a good thing. So why, you ask yourself, why are you getting into the trade? That's when the psychological component comes in, okay? So make sure there's some news tied to the stock before jumping into it. You can day trade without news, but I don't recommend it for beginners, okay? So also make sure the stock is having some type some type of reaction, right? Some type of movement to the news. So you look at the percentage, okay? At least like 3%, like some kind of movement to the news, okay? A reaction needs a reaction to the news. Because how are traders and investors reacting to the news, right? So this movement, the percentage will tell you up or down, you know, up 3%, down 3%, whatever. It's going to let you know how, you know, traders are reacting to it, okay? So analyze where the stock is at during pre-market hours. So your technical indicators will help you, you know, with your setup. So you know exactly where to enter and exit, okay? Oversold, that's not even supposed to be there, is it? Nope. Okay, so why do we use indicators? Because it's your armor. Helps prevent you from jumping into a trade blindly, right? And also has helped me from jumping into trades like the wrong trades. Okay, so what if you decided to yeah, let's just stick to that. Okay, so and it helps you become more conservative, disciplined. If you set up now, there you walk away. If you set up now, there you walk away. Oh, I misspelled that. So what I meant by that, so it does help you become more conservative and disciplined, right? Because if your setup is not there, then you walk away, right? If it's not setting up, and telling you which way it's going, and so you just walk away. If your setup is not there, you walk away. So your indicators help you. Let's draw it out. Okay. So I did this here for you guys. Here's our chart, and we'll draw it in a minute. Okay. So let's pretend we're in pre-market. We're looking at a stock. We notice that a stock is up 15%. We click on it and we see that there's news tied to it. Okay, boom, another positive thing, right? And then you said Amazon is partnering with, XYZ stock, whatever. It doesn't matter what the stock is. So, okay, we got news and it's up, right? So the psychological component behind it. How are traders, investors reacting to this? Well, if it's up 50%, if it's up 15%, like I said, it's positive, right? In my mind, I would think to buy, right? So you analyze a stock. I mean, that's how you analyze it during pre-market, sorry. And also, I forgot to put on here volume. Make sure volume is, at least 100K and up, right? You need that volume to get in and out of the stock, right? So volume, let's pretend the volume was at 600K. Great. So now I'm interested in looking at this chart, right? I can spend some time to look at it, right? So pre-market, it was up 15% because of the news tied to it. So it had some really good news tied to it. So the psychological component behind that is, investors, traders, whatever, are interested in it because it's up 15%. It's moving. Volume's at 600K. Okay, so now we got to check it out, right? So we are at pre-market, right? All right, let's say this is pre-market and the stock went up and it's doing this right now, right? This is where we're at, okay? This is where we're at pre-market. So the first thing I do, like you guys know on the first video, is draw your support and resistance key levels, right? It's very important. All right, so pre-market, clearly this is a resistance level because it's tested $10 once, twice, right? Resistance. And yeah, so here's our support at $5. Okay, let's just pretend $5 is our support. Okay, great. So we have our support and our resistance lines. Okay, cool. So by looking at this stock, we know it's close to resistance. Just keep that in mind. All right, so RSI. How do we use RSI, right? Okay, there's our RSI. And remember, this is 70. And what does 70 mean usually? It is overbought, right? All right, we got 30 down here. What does 30 mean? Oversold territory, right? Or cheap. And let's put like high. I don't know. Just, you gotta think of it different ways, okay? All right, this is our RSI. And let's pretend our RSI was moving something like this. Like I said, it's not perfect at ever, but we're gonna try to help you out here. So it's kind of like doing this thing, right? Okay, that's where we're at. And like I said, this is our RSI indicator. Okay, so as a trader, this is how I would analyze all this together, right? look at my chart, had great news. It's moving up 15% on great news. So this justifies why the stock moved up from $5 up to $10, right? It went up so much because people saw the news. It was great, bought it. Now it's hitting resistance at $10. I know this is a clear resistance level because it has hit resistance once, twice, right? So by looking at this, I can see by using the two indicators, right? Support resistance and RSI, that my stock is right here right now, right? It's right here. So by looking at this, I know it's close to resistance, right? It's close to resistance. I look at my RSI, it's close to the 70 territory, right? So it's overbought. Yes, that confirms that it's close to resistance, right? It's close to the top, right? And it's at the top, so it's overbought at the 70 mark on the RSI. So that means it's high on price, kind of expensive. More than likely, it's going to go back down, okay? In theory, that's what would happen, okay? But I don't want to explain a breakout right now, but let's just do this. Okay, so here we go. The market's going to open, right? Market's going to open. Stocks is probably going to do something like this and then go back like this. Okay, so what happened? Okay, so sorry. Okay, so traders about at $5 are holding, right? Because they're at $10 now. So when the market opens, they're going to sell their profit, right? Because they want to make profit, so they sell it. So the price goes what? Price goes down. More than likely, it's going to find its bottom at previous support, right? So it's holding at support. And then you'll see the RSI do something like this. Ew, I don't like that. RSI, probably see it do this, like. Okay. All right. So this is kind of how you use it. Okay. So let's just talk about entry and exit, right? We just talked about exit, right? So exit up here because it was way on the overbought, right? Confirmation, it was near resistance, right? So you have two confirmations. More than likely, people are going to sell, right? Sells down. Here it goes. People are going to look at this. Traders are going to look at this. It's in the 30 mark. It's in the oversold mark. More than likely, traders and investors are going to buy it cheap, right? Because it's at the support level, right? Support, confirmation RSI on the oversold territory, right? So people are going to buy it, and more than likely, it's going to go back up. Okay, and people are going to sell like near resistance, right? And then more than likely, you're going to see your RSI go hitting here. I always look at this when I start seeing it coming close to the overbought territory and hitting close to resistance, I will sell. Okay, so here's an example on my platform of my RSI, right? Here's RSI. Ignore everything else. Here's RSI. And by looking at the RSI, like I said, look at the 30. So as you can see here, pre-market, I drew my levels, right? Support, resistance, and I made another support right here. But we look down at where it dropped before the market opened to this level of support, right? This low. If we look at RSI, look, it's down past the 30. So that tells us it's very oversold, right? Here's 30 oversold. You can see it. Look what happens. So it goes back up, right? Back to resistance, okay? So you can see on RSI how it climbs back up. You see? And it's like fair price, so it's not perfect, right? It didn't go all the way up to 70, right? And it was like way overbought. No, it just went up, as you can see here, and hit a resistance level, right? And it sold off again, kind of making a bottom here. You can see again up here how it just starts going back up. And look at the RSI, it's way above for a while on way overbought, right? And as you can see, it comes back down, and you can see on the RSI, it goes all the way back down to a little below the 30. So that's just an example. It's not perfect. You know, it's never going to look perfect. And sometimes it does, sometimes it doesn't, but it does help with your entry and exits, you know. Like here's an example. It's the same stock, just a different time frame, which I like to use both time frames, right? But let's just concentrate on what RSI does, okay? So came back down and found a bottom, the same bottom here. You can see a clear picture. It's on the 30, way over oversold. Came back up, right? And it came back up, but it's like in that mid-range price. Yeah, and then it had a breakout. But let's not talk about that. And here it is, close to way over overbought territory, right? 70. So that's an example. It's not very clear, but that's kind of how it looks like. And this is not the best stock to show an example for. I'm sorry, that's all I have. I've just been busy today, getting ready for Christmas and traveling. So I just picked this one today just to show you an example, just purely off RSI. But as you can see here, you know, like when it's down to past being oversold, past the 30, it usually goes back up, right, to back to resistance. So that's why, like I said, it's important to understand support and resistance in conjunction with using your other indicators like RSI, because you just kind of all mix it together. All right, I hope that makes sense. The next video we're going to add into our indicator is going to be SMA line. Here is my SMA line. We'll talk about that in the next video. And all together, we're going to learn how to use support resistance, RSI, and your SMA line, right? So you're becoming a better trader. I'll see you guys later.